Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Schwab, and today, my friends, we are talking price patterns. And you may say, didn't we talk about price patterns last week and the week before? And you would be right. Last week, we talked about pennant patterns and triangle patterns. The week before that, we talked about flag patterns. And today, it's all about range-bound patterns and trend reversal patterns. So we're going to talk cup and handles, inverted head and shoulders, double tops, double bottoms, all that kind of good stuff. We're going to do some example trades. So buckle up. This is an introductory level class, but we do have a lot that we want to talk about today. So if you have questions as we go along, we have the privilege of having the fabulous Ben Watson with us in the chat. He is a friend and a fellow coach, and just led an incredible 2-day workshop on advanced options in Anaheim, and I got to ride shotgun with him for that. I know that some of you that are here, like Josh Pink, were at that event, and yet you're right back at it again here in the webcast. So hello to all of you, and welcome or welcome back. So to Paul and John and Jay and Priya and Sharon and Josh and Regina and Rachel and Jackson and Life in the Fast Lane and the rest of the gang. Thank you all for bringing this class to life by being so participatory in the chat. If you are not following Mr. Watson and I in the land of X, consider this your formal invitation. My handle at Barb Armstrong CS. Ben's is at Ben Watson CS. Now, after this class, I'm going, and I've already posted a couple of the charts we're going to look at today on X with these trend reversal patterns. And that's, part of the type of content that Ben and I share with you on a daily basis on X. But I'm going to post something that says, would you like me to follow you? And the reason I'm going to do that is that I have been found by the spammers and the bots. I'm prone to impersonators also, so just know I'll never reach out to you on X. But if I follow you, then when I post things and limit who can respond, you'll be able to respond to the things I post. So I encourage you to just let me know if you'd like me to follow you. So, and if you're wondering why, that's the reasoning behind it. I'm trying to get rid of the spammers. Okay, so know that in this class, everything that we talk about here is for general information purposes only. None of it to be construed as a recommendation or endorsement of any particular security or strategy or the trading of any particular chart pattern. We do talk about both stocks and options in this class and know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn and hone your skills, become familiar with the platform and the trading strategies that you're interested in trading. There are some nuances and differences, and we'll talk about those as applicable. And know that this is Getting Started with Technical Analysis. So our focus in this class is on technical analysis, but that isn't to say that we recommend that you only consider technical analysis in placing a trade. You're going to want to be aware of earnings season and what's going on globally and what's going on within our country, what's going on with the fundamentals, with tariffs, all of that good stuff. So having said that, we are now in week 7. So, it's the third one in this series on channels and reversal patterns. In the last go round, I also threw in one on Fibonacci's. And so I will add that again to this rotation. But next week, we're going to talk about some popular technical indicators. And so here we are, we're in week 7, channels and reversal patterns in this 9-week series. So I know that some of you joined us in Anaheim, California, right across the street from what Ben Watson might refer to as the motherland. And I posted a picture. We went to Disney's Main Street for dinner, and it was actually, much to my surprise, quite fabulous. One night after the event. But if you miss that, you've got some chances to be able to meet and and talk with us one-on-one. And one of the things I love about these two, both when I attended them as a client and now as a coach, is you get to meet other people and trade ideas, and it is just kind of a wonderful thing. And I love seeing that. The next up is the Miami Market Drive, and you'll see Ben there. Ben will be at all of these, by the way. And Kevin Horner will be in Miami, and he'll be in New York in August. I'm having a knee replaced. I won't be able to fly come August 8th and 9th. And that's a little bittersweet because I love New York, but I will be in New York for the Market Drive at the end of June. And these market drives, they go from what's happening, globally from a market perspective, what's happening within our country, to what's happening with individual sectors. And then we'll look at, here are some examples of specific stocks, and we'll even place example trades for illustrative purposes. So it goes from, global right down to individual companies. And they're really fabulous events. And we pull out all the stops. We'll feed you breakfast, we'll feed you lunch. We have a reception, with drinks and really nice hors d'oeuvres at the end of it. So if you can get to one of these events, I would highly recommend it. And they are free to attend, which is pretty amazing. Yeah. And Sharon said she was at the live workshop as well. I think she's going to be in New York also, and can't wait to see you again. It was great to see you in Anaheim. Okay. So that's my plug on that. So today we're going to look at these trend reversal patterns. We're going to talk about how they're created, and then we're going to spend a bunch of time looking at charts and placing some example trades. So that's kind of what's on the menu for today. And, where can we see these examples? Well, actually, let me go. This is the only class where I really actually have a number of PowerPoint slides. So let's go through them, because someone, not me, but someone put a lot of effort into creating these, for us to use. And so all of these patterns, when we look at them, just let me get my drawing tool going here. It's the French Canadian in me, it's hard to speak without a drawing tool in my hand. So how are these created? Well, all of these price patterns are the result of different horizontal, and for most of these examples, they're horizontal support and resistance lines, although with some patterns, they can be a diagonal as well. And they're forming different patterns. Oh, can you tell? Spoiler alert, I was posting something a little earlier on X, and it was in black, and I didn't notice that. So, yeah, these price patterns are created by horizontal and resistance lines. And each pattern, and today we're talking about those trend reversal patterns, have a unique construction. And we're going to talk about what to look for. And then we'll look at several examples on the charts, and then you can go out and just pull up an index like the NASDAQ or the S&P 100, or you might want to pull up one for a specific sector and just kind of click through them to see if you can find more of these patterns. Okay, and these patterns form over a given time frame, and it can really be any time frame. It can be short, intermediate, or long. So these patterns can be created over a period of hours, over a period of days to weeks, and over a period, if you look at say a 5-year chart, of weeks to months. And so it's not that these only apply in a specific time frame. I tend to look at a daily chart. And it could be 6 months, 9 months, 1 year daily. And then what we're looking for when we see this pattern is signals that both give us guidelines for establishing a price target, but also a signal that might give us a guideline as to an entry. So we're looking for both entry guidelines and exit guidelines. And these patterns can help us establish all of those, our entry and exit signals. Okay. And also targets. So you could say exit signal, they might be referring to a stop here and then a target. And we're going to do some example trades where we're seeing the entry signal, establishing a target, and a stop. Okay. Okay. So what are these patterns of which we speak? Well, the first one is a rectangle or a sideways channel. And I refer to this as a stock that's kind of going a whole lot of nowhere. And, do we see this often? Well, there are some years where we see it a whole lot. And where it seems, we see a lot of it. A stock that it keeps hitting a similar ceiling. And in this case, it's done that multiple times here. And then it comes down and bounces off a similar floor. And, support and resistance are not finite numbers, they're ranges. So you can see it came up here and then it kissed it and then it didn't quite come up but came close. So these things are ranges. And so when we see something trading in a channel, now it could also be a channel like this. And we saw a lot of this happening, from February through April, didn't we? Yeah. Ricebird, do you have a hall pass to come in late? Yeah, I'm just teasing. So, and often these consolidation patterns, because this is a consolidation pattern, it can be bullish or it can be bearish. And it can result in a change of direction. And we saw that on Dollar Tree, where this stock had a great fall. And then from like September to about April, it went sideways and then it broke out. So it can be a trend reversal pattern. And we saw that on Dollar Tree, and we'll go look at that chart just as an example. Or it can be a trend continuation pattern. So it could have been that it came down, went sideways for a while, and then broke to the downside. That could have happened too. So it can be either a continuation or a reversal pattern, when we have something consolidate like this. Okay. And what we're looking for, if the expectation is that it's a continuation, is that we have a strong trend one way or the other, and then this period of consolidation where we've got horizontal support and resistance lines. And it's considered an entry when it either breaks support or resistance, depending on which way it's going. And if we're looking to establish a target, we're looking for the width here, and then we're looking for that to replicate. So if this is $10 wide, we might add to our resistance level when it breaks out $10. And we're going to look at examples of this also. But just to walk through the theory of it, if this is new to you. And if you are here for the very first time, feel free to type a greeting into the chat so that we can welcome you. Now, a double top, this creates a lot of angst for the bulls amongst us. And we saw these types of patterns, setting up in February and March. And where we had something come up to a high, and then it came up to a similar high or the same high. And we consider this pattern complete if it breaks below, this support level. And often it'll break below and then come back and retest. And this is not uncommon. And sometimes a more conservative trader might wait for that retest. And then when it comes back and retests and continues to fall, if it does continue to fall, they might place their trade then. But what we're looking for on a double top, or this could also be a head and shoulders. Or maybe we should turn that frown upside down so that smile became a nose. And if it breaks below, something similar. It could also be, a triple top. So sometimes you'll say, ooh, I see a double top, but it hasn't broken broken below yet, and then it comes up and it hits it again. And so that we would call a triple top. And all of these, we're looking for the same thing. It's considered bearish because it's a trend reversal pattern if it breaks below. And how far would we be looking for this to move? Well, again, if this is about a $10 range here, when it breaks down, we'd be looking for a $10 move to the downside. Now, could it end up being more than that? Sure. Could it end up being a little less? Sure. It's just a guideline, but that's our potential target. We're going to measure the difference between support and resistance and then replicate that. Okay, so there's a bearish reversal pattern. Now, what about the bulls? Well, we're just going to flip it and reverse it. Okay, so, instead of it being a double top, let me shake my little Etch-a-Sketch here. This is our double bottom. And, this is a trend reversal pattern, right? Because it was downtrending, came down, hit a low, and then a similar low. And then it came up and hit this high. And when it hit it again, if it breaks out, and again, we're going to measure this distance. And if this is about 10, then we're looking for it to move 10 to the upside. Okay, and our entry would be that break of resistance. And our target, we're going to, measure the difference between support and resistance and add that to our resistance. And typically this is going to follow a downtrend. Okay, and again, any time frame. Now, could we also end up with like a triple bottom here? We could. So, and we saw this is one that we saw in Dollar Tree when it was in this range, for a longer time. We had, so this could be a triple bottom. Could we also have an inverted head and shoulders? We could. So it could end up looking like this, where it came down, came up, came down even further. So you're going, ooh, trend continuation on this downtrend. And then it comes back up to a similar high and then comes down. And that's an inverted head and shoulders. Because it's upside down. And how do we measure? From top to bottom, from support to resistance, and then we would add it to the top. And that's an inverted head and shoulders. Now there's another pattern. And I know some of you guys who are regulars would know what that third one is. And what might that be? Well, and I think I posted, well, no, I didn't do one of these today where it comes down and we have this big V pattern or this big bottoming pattern. And then we have a shorter dip. And we call that a cup and handle. And how do we measure it? The same way we measure all the others. We go from, we go from this bottom here. We measure this distance, and then we add it to the top. Riceberg, you got it, cup and handle. Yeah. How many days do I need to look back for, a double bottom pattern? It depends on the time frame of the chart. So if you're looking at a 5-day chart, you may see something setting up over a period of a couple of days. If you're looking at a 1-minute chart, you could be looking at hours. I tend to look at a daily chart, say a 9-month or a 1 year, daily, so I'm looking at weeks to months. And you could be looking at a 5-year weekly chart. So you could be something that took a year to set up. So it just depends on the time frame. Yeah, and so let's go and look at some examples on the charts. Oh, let me just move that out of the way. So can we see these patterns on indexes? And I've brought up the SPX to start. And so, when we look at the SPX here, like starting in November, and let me just bring out my drawing tool again. Whoops, I didn't mean for that to go to yellow smello. Did we have a double top setup? We did, didn't we? And then it broke down. So we had it break down below, and then it came back to retest. And then it continued on down. And so what might our target have been? And I'll show you the easiest way to measure is if we take our drawing tool, kind of like this, and I just go from our top to the bottom. Oops. And then I take this and I'm going to duplicate it. And I'm going to come over here. So this might have been a target. Now, did this turn out to be the bottom? No, it went down twice as far, didn't it? Because if I took this and I duplicated it again, okay, duplicate. My thing seems to be sticking. So it went down twice as far. But if we had set that as a target, would it have made that target? It would have. Now, sometimes they don't go down that far. And sometimes, as it turned out, that was just the halfway mark. Now, if we look at this more recently, might we look at this and say, well, we had that double top pattern. And then if I'm playing I Spy, what it looks to me, and this isn't perfect, but a bit of an inverted head and shoulders. And then if we were to measure that, we'd have a new all-time high on this index. So did it break out? Yep, right here. Did it come back and retest? Yes, it did. Now, does it always do that? Not necessarily. Sometimes it breaks out and it keeps on going. And then sometimes it could break out and it turns out it wasn't a real breakout. It could end up being a fake out. We saw that happen with Crocs. So, there are no guarantees. What do they say? It's just death and taxes. Now, I've mentioned Dollar Tree because those of you who come to some of my other classes, we did some sideways ranging trades on Dollar Tree. And why did we do that? Because it was trading in this sideways range for such a long time. You'd say this was a range or somehow like a big double bottom pattern, maybe. Where we had this come here. Oops. And then here, or we might call it, so you might see there's a double bottom. This is kind of more of a cup and handle, although it did come all the way back down again. So we could call that a triple bottom. And then did it break out? Yes. Did it come back? Yes. So it kind of retested, although it didn't come all the way back to 77. And now it's hitting a new, high since it dropped here back last September. Not an all-time high. I mean, on the 1-year chart, it was as high as 121, and now we're at 96, just ahead of earnings. But what we did with this, because we do some example trades, is we were selling what we call iron condor. So we would do a short call vertical here at the top, which meant that our expectation was that the stock was going to stay below this short strike that we sold, and then we would do a short put vertical at the bottom with the expectation it was going to stay above that. And that is officially called an iron condor. So that's one way that we can trade something that's in a sideways range. Now, there's another stock that we've been doing something similar with, and that's called McDonald's, Mickey D's. So let's have a look at McDonald's. So do you see this? It was uptrending, pulled back, and then it's been in this sideways range, hasn't it? For a little while now, where, you know, from about February on, it's been trading in this range. It's come down and hit this support level around this 295-ish level a couple of times. And then it's come and bonked its head up here around this 320-ish range. And then it hung out there, like just kind of hung out in that neighborhood and then came up and hit it again. And again, the idea here is, you know, when we do this type of iron condor trade, is that we've put a short call vertical on at the top and we want it to stay below. And then we've done a short put vertical down at the bottom where we want it to stay above. And that one is due to expire on Friday. So we'll be talking about that in class tomorrow. Okay, so let's look at Oklo. So when we look at this stock, and let me just kind of wipe our slate clean here, what do we see? Well, if we'd looked at this a little while ago, we might say, well, we had kind of like this consolidating pattern happening here, and then it broke out and took off, didn't it? And others might say, well, I'm looking at this as kind of a big V pattern, and I'm waiting for it to break back above. But we don't have that pattern complete yet. It's bonked its head 3 days now out of the last 5 on this 55.50-ish level, but it's not broken quite through. Now, I did mention Crocs. And Crocs, again, like we had this sideways range, right? You know, where it came down a few times and hit this support level. And then it kind of hung out here for a week or so. And it spent a lot of time skidding along around this 114-ish level. And then it came up again and again and again. And then it broke out. So you might look here and go, well, let the, you know, banners fly and the band play. It has now broken out. But then what happened? So we see a breakout and then we wait. Now, some more conservative traders might say, I'm going to wait for it to come back and retest. And you know, we got this inverted hammer pattern here on this day. Now, with an inverted hammer, what do we need? And I'll show you where to access these short videos on individual candlestick patterns. And we did spend a whole week talking about candlestick patterns in this class also, but you need confirmation. You need for the next day, the stock to close above. And what happened? It came right back into this range. So this turned out to be a fake out and not a breakout. You know, so when it came back to retest, it came right back in. And so here we are back in the middle of the range. Yeah. Okay, and then Lilly. I want to look at one more that's in a sideways range, and then we're going to move on to another pattern. Okay. So somebody's asking how I make those resistance and support lines that I drew as dashes. So here's a drawing tool here. So when you come to drawing tools, if you pick this one with the dollar sign, so I'm just going to draw a line anywhere on this. So let's draw a line down here. And the reason mine shows up as dotted and blue is because I drew a line and then I came to edit properties. And when I came to edit properties, I said, I want you always to show the price on the right. The default is not to show it. So I changed that to on the right. I changed the color to blue. And then it can either be a single line, dotted, or little dot. So I went for the big slashy lines and I made them a bit wider so it's easy to see. Okay, and then I said, save that as a default. And so that's my default. And that's why those lines show up looking like that on my charts. Yours is probably a skinny black line. Okay. So that's how those lines start looking like that. So on Lily, we have something, it looked like, we have this big range, this big fat range that it's trading in. And it's come up to this 928 level, and then it came up to 920, and it's been a little messy, but it's come down here to this neighborhood a few times also. And now it's moving again to the upside. And so if you wanted to trade this, how might you trade it? Well, you might say, well, I'm going to come down here and do that idea, that short put vertical idea, where I think it's going to stay above this 697 or 700 level. And so I'm going to come here and see if I can sell the 700 and maybe buy the 695 or the 690 to define my risk. And we call that a short put vertical. And that's an option trade. Or could we just buy the stock and then put in a target of the previous high? So that's like a swing trade to say, I'm going to trade it back up to, when it gets back up to this 900, I'm going to sell it. And right now it's trading at 754. But if you bought 100 shares, that's a $75,000 position. We don't, in this account, want any one position to be more than, well, in this account, $5,000. But in the account that we usually use for examples in this, that's a $500,000 account. So we don't want any one position to be more than 25,000. Well, could we buy 25 shares? Or could we buy $25,000 worth of shares? We could do that. So that's a potential. And some might say, but it's below the 30-day moving average and below the 200. Well, when things are range bound, they tend to weave back and forth through the moving averages. Like when we look at Dollar Tree, it wove back and forth between the 30 and the 10 for months. And so that's an expectation when something's moving sideways. Okay. So with Lily, if we wanted to do this as a stock example, where might we put our stop? Well, we might say, I'm going to go below this recent low here around 709. So, or 700. So if I took 709 times 0.97, our stop would be at 687.73. So we're using our support level within this sideways range to determine our exit. And we're also using it to determine our target. And so we might say, well, how about we make our target just shy of this previous high, make it around, could be 895. Okay. And we're on the other side of earnings here. Came in a little shy of earnings. Okay, so, and then, you might want to see How are the analysts looking at this stock? So DBS has raised their price target, has adjusted their price target down to 900, but our target is lower than that. You know, but they've lowered their price target from 1,000 to 900. That's not very bullish, is it? And so you might not say, you might look at that and say, you know, I don't know if I want to place that trade then. Well, you know, then you might not choose to place that trade. But if we decide to go ahead and do this, we're going to say, okay, if I have $5,000 worth of stock, and I'm going to bring up our calculator here. 25,000 is our max position size. I'm going to divide that by the current price, which is $7.55. We could buy 33 shares. So we're going to round it and buy 30 shares with an OCO bracket. We're going to put in a target of $885. So just shy of that 900, and our stop is going to be at 687.73. $687.73. And we're going to make both our target and our exit good till canceled. We're going to come to confirm and send. And we're going to put this in our stocks with a target. And we're going to put a note in here, based trade within a range, target close to resistance, so that we know why we put that target in if you're looking at it afterwards. Now let's look at Travelers, or sorry, well, we could look at Travelers. It was on the list. And so here we have a stock. We have this big double bottom pattern, right? It broke out, came back to retest, and is moving to the upside. So might we do an example trade on that? We might, although today's candlestick is indicating that this latest 3-day uptrend may be coming to a close. So we may just want to keep our eye on that. Oh, did I not change the quantity? If I didn't, I can go back in and fix that. So there's our double bottom. And what might our target be? And again, we're going to measure the difference here. This is 34. So if we added 34 here, our target might be around 299. Okay. Now, what about TSM? If we decide to stick with the T's, TSM. Okay, so what chart do you guys see here? Feel free to type that in. Could this be an inverted head and shoulders? Or here's the first shoulder, head, second shoulder. And what's our range? Our range on this one is about 49. And so what might our target be? Somewhere up around here. Now our previous high, I think, was 228. This would be around 232. So, and again, could we buy the stock and put a target, maybe make it 225, knock a little bit off it, make that our target? And then where might we put a stop? Well, we might say, well, it seems like this has become a new support level. If we want to be more conservative, we could make it below that 183. And this is, you know, a less expensive stock at 197 compared to the last one. So if we look at our low there, that was 188.81, and I'm going to multiply that times 0.97. So that would make our stop around this 183. And if you want to be a little, you know, just give it a little more wiggle room, you might want to even make that like 180. And you know, why would you want to do that? That's $17 worth of risk you're taking per share. Well, because in doing so, your odds of being stopped out are then lower. You know, the tighter the stop, the higher the probability that that stop will be hit. And so if we come up here, we're going to make our target. And if we wanted to draw a line, we could, you know, say we're going to make our target here 225. And this is our stock target. And we can say we want to see that on the right-hand side. So now we know what we're aiming for is basically this previous high, which is also the range here of this inverted head and shoulders pattern. And so we're going to come to our trade tab. We're going to buy 100 shares with an OCO bracket. And this time we will leave it at 100 shares. And our target on this one is going to be 225. I'm going to make that good till cancel. And our stop, and I'm going to make this 180, instead of 183, I'm going to make it 181. And now if it gets halfway to our target or further, can we adjust our stop? Absolutely. We did that on Meta recently in our getting started. I just want to make sure I have that. That's a 1 and not an I. Okay, so our position size, almost 20,000, 19,766. We want to buy 100 shares. We want to sell when it goes up by 27.28 or down by 16.58. Okay, and we're going to put this in our stock with targets. Now, I wanted to mention something else. Well, let's look at, sometimes, you know, we get looking at something and we think, oh, that's about to break out. And in fact, I had posted, I think on X, a picture of this and said, hey, this looks like what kind of pattern? This looks like a cup and handle pattern, doesn't it? So here's the cup, here's the handle, but no breakout yet. And so sometimes it's tempting as a trader to say, oh, look at this pattern. I'm sure it's going to break out. So with technical analysis, we don't want to trade what we think is going to happen. We want to trade what we see happening. And so do we see a breakout yet? We do not. So what do? We wait. We wait. You know, and you might want to put that on some kind of short-term list, or you might see a chart like this. So Triple M, where you might be looking at that and saying like, hey, this has been uptrending. You know, we had this consolidation. And if I get rid of this line, it might be easier to see. So what might be setting up? Now, notice the use of the term might be. So could this be an inverted head and shoulders pattern setting up? It could be, but we don't know yet, do we? Because it hasn't completed the pattern and it hasn't broken out yet. And it may not. It may get it here and then it may come all the way back down. Yeah. Yep. And same with Allstate. So sometimes we see these patterns and it's so tempting. Now, this one is particularly tempting. Why is that? Because we've got this big double bottom pattern. So you might say double bottom. I say tomato, you say tomato. Some might say, well, you're calling this a double bottom. I'm calling this a cup and handle. And you know what? We're both, right. Or we could call this a double bottom. But either way, we're flirting with breaking out. But are we there yet? Not quite. So this is where we have to, take one hand, take the other hand, and we sit on them. So as we wrap up, we're out of time for today. I hope you found this conversation helpful. And here's my ask. We have almost 200 people still watching live. If you could please hit the like button, it lets Ben and I know you found this helpful, but more importantly, it moves this up in the algorithms on YouTube so more people can find this content. So hit the like button, subscribe to the Trader Talks from Schwab Coaching. If you haven't done so already, there's a button in the bottom right corner so you can find all the archives and all that good stuff. And then, don't forget to follow us on X, Barb Armstrong CS and Ben Watson CS, and look for that post this afternoon from me. And I'd encourage you to respond so that I can follow you back, and then we can converse in the land of X. So we say tomato in Canada, Ben. Just so you know, we also say roof, which is how roof should be said. Okay, so that's about it for today. Thanks for joining me, guys. Get out there, enjoy the rest of your day. Up next is trading swing with swing targets. So I hope you'll stick around for that and get out and hug someone you love, guys. I'll see you tomorrow for Trading Price Patterns. Bye for now.